specified domestic transaction which is provided under section 92 BA. So again, another important one to understand this. So till now we have seen the transfer pricing provisions which are applicable on the international transactions. But in this particular case, in this particular provision, you will see the transactions which are happening within India, but still the transfer pricing provisions are applicable. So what are those cases? What are the circumstances in which this specified domestic transfer pricing is applicable that we are going to see? For example, so I will give you a background before going into the provisions. For example, there are two companies you assume, A company and B company. So A, both are in India only. Both are in India only. B is a wholly owned subsidiary of A Limited. So let me write it down here. So there are two companies, A Limited, B Limited. Both are in India only. B Limited is a startup and B Limited is a wholly owned subsidiary of A Limited. So management is both the companies are one and the same. So wholly owned subsidiary of A Limited. Now both are in the power sector business. Both are into power sector business. They will generate, distribute, and transmit the power. This is the scenario. Here in this case, as B Limited is a startup, it is eligible for a deduction under section 80 IA. Under section 80 IA. Chapter deduction, section 80 IA. What is section 80 IA? I will give you an overview here. I hope you have already studied about this provision in the chapter deductions chapter, but I will give you an overview here. Section 80 IA says that SSE is eligible for a deduction, 100% deduction, okay, like a tax holiday period for the 10 assessment years for all eligible businesses. What are the eligible business under section 80 IA? For first one is infrastructure facility. Infrastructure facility means like any construction of the roads, highways, operating and maintaining them, etc. And second, technology parks. And the third one, generation, transmission, and distribution of power. And the fourth one, renovation of the power plants. So if a SSC is doing any of these four categories businesses, then he will be eligible for a tax holiday period which is 10 years. So that is the arrangement. Assume that in this case the B Limited is eligible for section 80 IA deduction. Okay. Now what A Limited will tell to B Limited is, ask B Limited that B Limited will sell the goods to the A Limited with a higher prices. For example, B Limited sells the goods to A Limited at 15 lakhs for one transaction, but actual market price for the same transaction is only 10 lakhs. Market value is 10 lakhs, but they are selling it to 15 lakhs to A Limited. Why they are doing this? Because A Limited can show this 15 lakhs purchased from B Limited as purchase as the debit to the P&L. Thereby, it reduces its profit. Thereby, it is reducing its tax also. Similarly, B Limited show this 15 lakhs as their sales, but even if the sales are increased, they are not paying any tax because they are in the tax holiday period. So this is the arrangement. Companies have started doing it, and central government has observed this and made an amendment to this chapter transfer pricing provisions and introduced the specified domestic transactions, thereby reducing the elimination of disparity within India only for inter transfer of the goods and services between the units. Okay, that's the concept behind this introduction of the specified domestic transactions. Now we are going to go and see each and every point in detail. As per section 92 BA, a specified domestic transaction shall mean any of the following transaction which is not an international transaction. So it's a domestic transaction. Namely, first we'll go to the 80 IA because just we have discussed. Point number 2. Any transfer of goods and services referred to in section 80 IA subsection 8, that is inter-unit transfer of goods or services between eligible business. Eligible business, I told you there are four categories, right? Those are the eligible businesses where the consideration for transfer is not in line with the market value of goods and services. Just what we have discussed, they are talking about the same point. Here, the 10 lakhs worth of products, they are selling it for 15 lakhs. So it is not in line with the market value of goods and services. In this particular case, this domestic transfer pricing is applicable. Point number 3 says any business transacted between the SSC carrying on eligible business and other person as referred in section 80 IS subsection 10. So point number 2, point number 3, one and the same, but only change here is there we are talking about a inter-unit transfer of goods and services. Inter-unit transfer, that means both the companies are associated to each other, whether that is a holding and subsidiary, whether that is associate, whatever the relationship is. But in point number 3, they mentioned like any other person. Any other person, that means he need not be a closely connected person. Okay, he can be even if there is no shareholding also, if that person is a closely connected with this enterprise which is enjoying the tax holiday period, and there is a transaction, that transaction is actually giving a excessive profits to tax holiday company and the lower profits to another enterprise, then also this domestic transfer pricing is applicable. What is the trigger point here? What is the trigger point here? Not the associate enterprise relationship, shareholding, etc., etc. The trigger point here is any transaction between the tax holiday company and the other company which is not enjoying the tax holiday period, and this tax holiday company is selling the goods above the market value, thereby reducing the profit of other enterprise, then these domestic transfer pricing provisions are applicable. Okay, this is about section 80 IA. And point number five, now we have completed point number 2, point number 3, now we're coming to the point number 5. Point number simply says this is a miscellaneous provision. It simply says that anywhere in chapter 6a or section 10a for which 80ia subsection 8 subsection 10 are applicable, anywhere in the entire chapter 6a deductions, then also these provisions are applicable. This is a miscellaneous provision, you can just remember. I will see point number 1. Point number 1 says that inter-unit transfer of goods and services referred in section 80a. What is section 80a? Section 80a is a base for the chapter deductions chapter. So this section simply says that SSE is eligible to have deductions under section 80C to 80U by complying with some conditions. That is what section 80A says. That one of the subsection, it is section 80A subsection 6. It says that the inter-unit transfer of goods and services between the units has to be done at a market prices. That is one of the condition it says. So anywhere, not just section 80 IA, anywhere in the chapter deductions, in any place where there is a tax holiday, one entity is enjoying the tax holiday and other entity or any other benefit, and other entity is not enjoying those benefits, if there is a transfer of any, if there is any transactions which is not in line with the market value, then these domestic transfer pricing is applicable. Now we have completed 1, 2, 3 and 5. Now 4 and 6 are pending. What is point number 4? Point number 4 says that any business transacted between company opting for section 115 BAB and person with whom company has close connection, What is section 115 BAB? 115 BAB is actually introduced to boost the startups in India. So whoever SSC is engaged in the manufacturing businesses, for them there is a concessional tax rate of 15% is applicable. 15% plus surcharge plus cess is applicable under section 115 BAB. So this is just to boost up the manufacturing concerns and reduce the tax burden. So if any entity is enjoying this option of section 115 BAB, then it deals with any transaction with a closely connected person or its associated enterprises at a prices which are not in line with the market prices, then only this specified domestic transaction provision under section 92 BA is applicable. Okay, so because there is a tax planning again happening here. Similarly, just what we have seen in the example of our section 80 IA, similar kind of things may happen for under this provision also, because there is a concessional tax rate is applicable for one entity. For other entity, this concessional tax rate was not there. So there can be a possibility. And now the last point is point number 6. Any other transaction has been prescribed. Central government can add any other points here. This is all what about the specified domestic transactions provision. In summary, what is this specified domestic transaction provision? Section 92BA provides the specified domestic transactions. Under this, any unit, simply I would say any unit is enjoying any benefit or tax holiday, and other unit having associated or closely connected other unit is not enjoying these benefits, and any transaction between these companies which are not in line with the market value of those transactions, then the specified domestic transaction provisions are applicable. Okay, this is simply a summary of this provision. Just like any other provision, section 92BA also has some exception. The exception is that if the aggregate of the total transaction value, that is inter-unit goods and transfers, etc., whatever the point that we have just discussed, if the total aggregate value of those transactions, if it is not exceeds 20 crores in a previous year, then these provisions are not applicable. Total value of those transactions, if it doesn't exceed 20 crores, then these provisions are not applicable. What if the transaction value exactly 20 crores? Even if it is exactly 20 crores or so, these provisions are not applicable, because the point says here is doesn't exceed 20 crores. Even a single rupee also, these provisions are applicable. To exactly 20 crores, these provisions are not applicable. Below 20 crores, these provisions are not applicable. Okay, that's all about the specified domestic transactions. So when I say domestic transaction applicable, so what does it mean? That means whatever the provisions section 92C to 92F, which are applicable for the international transaction, whatever provisions applicable to the international transaction, those will be applicable to the domestic transactions as well, once the transaction is fitting to the any of the 5 or 6 point what we have discussed. That is the impact. So we have completed this specified domestic transactions under section 92B.